What's going on, guys? Good evening. It's your favorite mortgage lender, Del Kwame. Got mortgages. I hope everybody had a blessed weekend. Weather was a little iffy. We got so much to cover this week. A lot of changes that are happening, man. Before we dive into some of the outside market factors, we're going to dive into, as we usually do, the typical weekly stuff. What happened last week? What's the expectation into this week? So we're going to start off first talking about the home buyer sentiment, right? We saw a little bit of a downshift with home builders, right? And we all know the most important thing that we want us to concentrate on is truly going to fall down to inventory. This is not something new. This is something that we have consistently been monitoring. And we started seeing a little bit of a home down sentiment start to continuously hold forward, which is awesome. Now we are starting to see, again, a little bit of a downshift, which is generally typical around the summertime with the home builder sentiment. But again, biggest thing that we're seeing is an increased current sales expectation is higher. Future sale expectations is higher. Buyer traffic at the same time is obviously increasing as well. So again, although the sentiment kind of dropped under the 50, we know simultaneously that interest rates have been on a decline, which we're going to dive into further. And we're going to start seeing a little bit of that positive downshift of what we really want to see when we talk about the interest rate market. Now, a lot of the construction side too, if we look at the construction market, you could literally see there was an increase of over 3% month over month when we take a look at new permits. There was an increase again of 3% as well in new starts, new homes that are simultaneously being created. A little bit of a downshift on the construction, but let's take a look. It's over 10% month over month and 15% year over year increase when we talk about completions. That's awesome, right? Again, we know that we're dealing with a supply and demand concern. This is not something new. When we're starting to see an uptick in regards to completions, that should help a little bit. We see a little bit of that downshift in terms of inventory. Now, retail sales also simultaneously came in a little flat. It did come in better than expectations, which is great. How are people still spending their money on the retail side? Although we're starting to see, again, inflation start to downshift, retail sales once again came in and supported that claim, showing that interest rates were simultaneously still on that downshift as well. Now, initial jobless claims, again, you guys are going to hear me talk about this consistently. It's always about the employment and it's always about the inflation market. And initial jobless claims actually jumped up for a 5-week high. We saw a little bit of an uptick, which again, right after 4th of July, the following week, generally tends to show a little bit more further data in regards to what we want to monitor. But we did see a little bit of that pace of layoffs, obviously, start to kind of move in higher. We do know that continuing jobless claims is super, super high. I mean, we're at almost 1.9 million when we talk about continuing jobless claims, meaning that people are still having a hard time finding a job after they have been laid off. This also goes to show you that of this 1.9 million, this could also include those that were collecting unemployment benefits, but just truly haven't had the ability to come back and actually get some of that money back or get a new employment for that matter. So that's going to be interesting to see a little bit of that shift in regards to the market and what that could potentially pan out when we take a look at those items, right? Now, we do know, again, earlier this month, we saw a downshift. When we talked about new job openings, we saw an uptick when we talked about unemployment. For the first time ever, unemployment jumped up to 4.1%. In about a week and a half, we're going to get some updated data when we talk about the prior month of July. We'll kind of see a little bit of that unemployment claims and when it kind of impacts in regards to the July jobs report. Okay. Now, in addition, I want us to concentrate also on what the expectation is going to be for this week. We already saw some updates in regards to the market, which we're going to take a look at. Rates are kind of really waiting on that precedented PCE report, personal consumption expenditure report. That is the Federal Reserve's favorite measure of inflation. We're also going to get some updates in regards to the GDP, gross domestic product. That's based on the economy. Is the market going to consistently start coming in, showing a little bit of positivity when we take a look at the market and we take a look at a little bit of that downshift? So you'll kind of see as we look into the market just a little bit of a flatness, right? Basically no movement as of today. Friday kind of took a little bit of a downshift. And that was truly just the built-up precedent with a lot of the things that were happening on the political side, which we'll cover in a few moments. 7/1/2024. It's a nice, pretty picture, right? Interest rates on a slow downward trend. They have been obviously pretty flat over the last few really week or so, seeing a little bit of that downshift from we're at about 6.85. Now we're at 6.89. Really kind of battling. We have made a massive progress. I mean, if you take a look at where we were at one point, super, super high, just crept right over into the 8%. And now we're kind of making a little bit of that downshift, kind of like a little bit of a heartbeat, but that is more or less the things that we want to monitor when we're starting to see a little bit of that shift. Okay. So that's that in regards to the market. Of course, I will keep you guys updated as we get those updated numbers. Now, a lot of different outside stuff. We all know from a political factor, and I won't give you my personal input for just lack of conservativeness, but we know that of the last few elections, we did see a little bit of a shift, and I shared this earlier. What does the home market generally do, or how does the home market generally react when we talk about elections, right? And that's going to be something that is very interesting for us to see because are people going to simultaneously be holding off until we see a little bit of a downshift when we talk about the market? Are people going to be kind of a little conservative in regards to buying homes? I am seeing a few people kind of give a little bit of indication in regards to them potentially wanting to wait until the elections. Now, I will be honest with you guys, and I shared this with us earlier. How do the elections generally impact the housing market, right? And I think that is important for us to understand and know how has the housing market really been impacted when we look at elections. How does the market generally react to it when we take a look at that? And I'm going to open this up for us right now, and we're going to kind of take a look at this. Was something I organized and shared with a few of us. But how do the elections slowly impact the housing market? So when we take a look at this, we actually see that home sales have actually gone up. And I'm going to zoom in so you guys can see it better. Home sales have actually gone up 9 of the last 11 presidential elections. So truly on a pretty consistent basis when we take a look at that stuff, right? Really year over year, except only 2 times, which is roughly around the late 70s, early 80s, and then right around the early and late 80s and 90s, right? Aside from that, we've consistently seen home sales consistently go up 9 of the last 11. And if we look at the last 8 presidential elections, home values have actually jumped up 7 of the last 8 times, of course, excluding the housing bubble. If we take a look at how have rates increased, mortgage interest rates have actually decreased, or I should say decreased 8 of the last presidential elections. Once again, excluding the 80s, 90s, and of course, 2016, we saw a little bit of a downshift. Nothing crazy in terms of market fluctuation, but this is super, super important for us to concentrate on when we're taking a look at these items because should the housing market obviously start to downshift and should the housing market start to play a little bit of a potential role in regards to how interest rates fluctuate, this is something that I really, really want us to make sure that we're keeping an eye on for because this could play obviously a massive impact when we see where is the downshift. We know, again, the 2 most important things that I want us to look at is going to be inflation, employment, wage growth, any potential presidential elections. We obviously know President Biden has stepped down. From the looks of it, it looks like his vice president, Kamala Harris, should be stepping in. That's going to show a little bit of a fluctuation, right? There's a lot of changes that are happening from the political parties. Not much direct impact to housing, but the economy is very fragile, right? And employers truly want to see a little bit of that confidence in regards to the market before they simultaneously go and start hiring again or start putting more employment market out there. I mean, we've been trying to personally hire a few salary positions within our employment as we've been blessed being super busy, and it's funny, I see it from both sides of the spectrum, both the employment market and then obviously on the employer side. And it's 2 tails, right? A lot of consumers are, in my opinion, sometimes asking for a little too much, but at the same time, a little bit of that fluctuation, understanding where the market is, and just due to inflation, the cost of living and the cost of things are rising. So really interesting to see those 2 pods of it. So we'll kind of keep an eye on that stuff. Other things I wanted to obviously mention in about just over a week, the NAR lawsuit was actually supposed to go into effect for the 17th. They've now upped it to the 1st in regards to exclusive buyer agency agreements must be signed. It was always a thing, right? It's just now being essentially mandated and mandatory that you have to sign an exclusive buyer agency agreement if you're a buyer's agent and you're planning on working with a consumer. So that's going to be really interesting to see because our client's going to be open to signing that, right? Our client's going to be really understanding that this is something that is set to Clear any clouds, I should say, later on to the closing. Ensure that the buyer's agent is truly providing that real value and real understanding approach of what they're simultaneously providing to you. That's going to be a lot of the different things. I've shared with a lot of our referral partners over 179 different things that a respectable professional is able to put in place from you, aside from just opening doors, as a cliche saying, right? It is truly based on the access to off market properties, the understanding of also financial data, connecting you with the right professionals from the attorney, title, lender, and so on and so forth, making sure that they're able to negotiate on your behalf, not just from a compensation perspective, but truly just from an overall understanding of the market, right? It is literally the biggest difference. Is, and what I tell my clients, something more important than the house itself with the professional that you work with. I truly see this being a positive thing when we talk about reducing the number of professionals on both sides of the spectrum, mortgage and real estate. But I do kind of see at the same time that we're going to see a little bit of fluctuation with some buyers. Interest rates are going to be slowly going down. Remember, for every one interest rate drop, we're going to see a little over 5 million new home borrowers start to come in the market. Could this play a little bit of a transition in regards to how this gets factored in within the loan? I will be working as we start seeing a little bit of just changes on another live, as we usually do every Monday. Kind of see a little bit of changes as to how this is going to be factored potentially into your mortgage payments, or potentially just rolled into your down payment as we factor in the numbers with burying loan to values and stuff like that. So, of course, I'll keep you guys updated, try to simplify it as best as we can, and we'll take it from there. I appreciate you guys jumping on. I will be sharing a copy of this later on onto our YouTube channel. So tune in, keep an eye on your inboxes, and we'll take it from there. I appreciate you guys jumping on, and I look forward to chatting you guys soon.